always happy to talk about my favorite topic, which is small business. And SBA, my three favorite letters. And normally when I give these presentations, it's always like, what is SBA? How's it work? But since this group is very well educated and connected. I think really highlighting the more second layer and third layer, the deeper conversations in SBA. So in my context, just to give you some more background, I sit on the board of NAGO, the National Association of Government Guaranteed Lenders, which is the main trade association that all SBA lenders participate in. It's our trade group that really represents the banks with the government, right? So we get to be on the front line of some very interesting conversations. This year was a big year for us as an industry. We had another SOP, Standard Operating Procedure book done, which was released effective June 1st. It was released earlier in the year. But basically, it is a rewrite of the entire program. The big highlights were putting back the components that were taken out in the previous version, right? So just to give you some context, during the first Trump administration, that SOP, which was SOP 1056K, was the continuation. If you see the K it started with A, and they've gone through minor revisions for that SOP lasted multiple years, I think 5 or 6. So the Biden administration came in and came out with a new SOP, the SOP 1057, which was a brand new SOP, but basically it just took out the underwriting requirements and created a environment that's what was known to be the do what you do, right? So that environment ended with the Biden administration, and now the second term of the Trump administration came in. He's like, you know what, those underwriting rules, probably a good idea. Let's put them right back. So then they launched with the 5010-8, and that's the one that we live in under today. But even since its passage and effectiveness June 1st, there's actually been more updates, even since my last presentation to this group. So in the new SOP, we go back to old school equity injection requirements and underwriting requirements, right? So now every loan has to debt service. You need to have a historical capacity repayment, and that's a 115 or better on current interim and last year's tax return, right? The SOP, this is actually one of the big changes recently. Now you need at least 95% of the business to be owned by a legal permanent resident or a citizen. That's a change. It used to be a couple weeks ago 100%. So this is breaking news. The SBA shared a procedural notice change last week, and this is welcome. This is actually good news. I think it should be more, but those are opinions. But at least it's more than nothing, right? That's infinitely more. So this gives a little bit more wiggle room for those transactions that have, really impacted ESOPs or, where some employees may have been granted options that weren't citizens, right? So then any component of the business that had these trace elements of non-citizen ownership, then it would kill the whole deal. So that change was provided. It used to be 49%, now it's 5%. Okay. Another trend that we saw from a performance perspective, and I was just reviewing again the numbers, but the default rates over 2025 as a industry-wide performance were up. Like we are continuing to see higher defaults. We have, they're not plateauing. We're seeing, maybe a slowing acceleration, but accelerating still over year. So what does that mean? That means that banks are going to be more critical, right? So when defaults are up, you're going to see tighter credit boxes. So unfortunately, it's a reactionary impact. So expect your conversations with your institutions to be a little more serious than prior. But that's normal in the business cycle components, right? So we talk about ways to mitigate, the being a part of these types of groups and organizations allow you to prepare better, which then provide bank better comfort in your opportunity. Right at the end of the day, when banks are underwriting, we're trying to figure out whether this is going to be a good deal or not. Will you pay us back? Right at the end of the day, that's what we want. We don't want to do collections. We don't want to do a workout. We don't want to take over collateral assets. None of that is fun. If you ask me, what I want to do every day is hand out money, not claw it back from people's hands, right? So it's that conversation is going to be more difficult in 2026 given the performance of 2025. And then another issue, a big theme for 2025, as I think most of the people on this call would remember, was the government shutdown that happened, the 40+ day shutdown. That from an SBA perspective, if you don't have your authorization in hand, then you're not going to have a loan closing period. So the good news is it ended. The bad news is the CR, the continuous resolution that was appropriated, ends in January 30th. So it is the 12th. And I'm surprised not many people are talking about it yet, but give it another week, and I bet you it's going to be on all of the major media news and talking about the imminent shutdown. And then hopefully, maybe there's a little more consensus this time than there was in November, but I don't, your guess is as good as mine as far as whether we will have a shutdown, and more importantly, how long will it be if we do. But the key point here is if you're in the middle of a transaction, especially if you're hard under contract right now, this is something that you need to have an active conversation with a lender on a plan, either to pull the authorization number prior to a potential shutdown, or, have the conversation with the seller to include this risk in your process, right? To allow your agreement to be extended during a shutdown period, right? So these are the kind of things that I think I would recommend to be thinking ahead if you're in that stage, right? So if you're early and you're in the LOI or you're negotiating your PSA, then this might be the time where you add the language where, if you're counting on financing, if it's SBA, that you will have an extension of your due diligence that's equal to any potential government shutdown period. So that's some flexibility there. Another result of a few factors. So the franchise directory is one of the revamped sections of the SBA. So the SBA allows for franchise financing. It used to be there was a website that the SBA had that produced a directory that listed all the franchises that have gone through several different approaches for eligibility. This new SOP that came out released a new franchise directory, actually brought it back. It was deleted during the Biden administration period, but it brought it back with a simpler process called a certification process. So if it's on the list, then the SBA has already reviewed them, and every bank in the country can take the fact that they're on their list as a stamp of approval that they're good to go. So that's good. The problem is, because of the government shutdown and the DOGE cuts to their labor staff this past year, they are woefully behind in publishing the update to the directory. So they have provided a self-imposed deadline that they were supposed to do in June 1st with the SOP change, which references the new directory method. And they extended it to August, then they extended it to September, so on and so forth. They punted again till the end of January to publish that new certification list. So if you're buying a franchise, my recommendation here as a summary is really that, keep an eye on this new directory, because if your franchisor did not go through the certification process on the new list, there will be additional steps that your bank will have to do, or even will not want to do the opportunity, because if they're not on the certification list, that means the bank has to do a significant second layer of due diligence on the health of the franchise and the eligibility of their franchise agreement, which is not, it's, ask banks to do more work, they're not going to be happy, right, at the end of the day. For 2026, you know, there's a lot of temperature checking in our industry. We talk to each other a lot, right, as bank directors, because we're all worried about the same thing. So we want everything to work out well, but we're also biggest worry warts that you're going to see in the country, right? That's why we're bankers. So we expect defaults to continue to go up, right? The industries that are leading the pack in this space are transportation, and then you start working your way down through wholesaling, retailing. Some of the, you know, think about the environment that we're in and the input components that are driving, you know, volatility for these business owners are higher labor input cost. We have volatility in inflation and interest rate environment, and a significant amount of additional uncertainty inputs, right? So tariff components, other macroeconomic activities that impacts that have been, in my opinion, created what is the word of the year for 2025 was uncertainty. And I think we'll have a continued uncertain environment in 2026, albeit I think not as much as last year. So there are optimisms, reasons to be excited, right? We do expect to have a lower interest rate environment, right? Jerome Powell was in the news this morning, but his term ends in May, and the president will get to nominate his new pick. And I would think the new pick, I would bet, would be more conducive to the president's preferences on the interest rate environment. So, and frankly, if you look at the economic data that we have, we're you know, job creation has plateaued, although we're also having a lowering unemployment rate. So these are, you know, factors that are going to cause a lot of conversation at the Fed, but general consensus says we will have a declining interest rate environment. The question is by how much, right? We're seeing the benefits of the BBB as far as the increased incentives, so some more money more in people's pockets. It's the expectations that should drive some consumer demand. Hopefully it doesn't create too much inflation, which is the other side of the equation from that perspective. And more granularly, the SBA is having a significant push into certain sectors, right? So manufacturing is getting a significant amount of attention by the administration, and they're focusing on doing, you know, sub-$1 million manufacturing loans have fee waivers. So actually you save 3% of a fee in that capacity, which is, you know, that's a lot of money, right? And then for loans over $1 million, there's the MARC program, which is a new program that the SBA launched, which basically is a larger SBA loan. You can go up to $10 million under the MARC program, but it has to be manufacturing industry code companies first and only. So yeah, I mean, this is you know, my outlook for 2026. A few more healthy tips that I always like to remind everyone, especially like the stuff in the new SOP. You can do 100% financing if you're doing an expansion, right? So if you own a business today and you're expanding into the same NACIS code grouping, then you qualify for expansion. Okay, so the nice thing is the change there was there was a line in the SOP that said it had to be geographically reasonably close, but since that was so ambiguous, it was removed. So now, you know, I have a client who owns auto body shops in Las Vegas, and I helped them buy 100% financing an auto body shop here in Fort Lauderdale, right? So that's an example of something that I think most people can take advantage of. If you are impacted by the non-citizen, non-legal permanent resident ownership component, let's say you have now that you have 5%, that's a little more wiggle room. But let's say you have raised capital or trying to work with some foreign nationals, maybe for expertise, you can use a convertible note structure. So as long as that note is subordinated to the SBA loan, you can have a convertible note that converts back into equity post SBA payoff. So that was a creative mechanism that I saw to get around that issue. And additionally, the international trade, which is always something that I think most people don't realize is part of the program. But if your business or the business that you're looking to acquire has exporting activities, so that the definition there is revenues from outside the United States, so like Canada, Mexico, anywhere, services or goods, and directly and indirectly, right? So if that business provides a good or service to another business that ultimately exports, that as long as that exporting business attests that your input is part of that process, then you also qualify for international trade. And so why would you care? Why would you want this? An SBA 7A loan carries a 75% guarantee to the bank. That's the insurance policy. That's why we do these loans, to protect and mitigate the risk, right? If you have an international trade designation, which is the exporting activity currently, and that you will grow that activity in the future, and you have to just give me an estimate and tell me which countries you're going to be doing business with. If you hit those check boxes and you're an SBA eligible business, now the guarantee goes from 75% to 90%. So it's 90% guaranteed loans are much easier to get approved at the bank, because now our collateral exposure is lower and our risk mitigation is lower. So it is something that I always say, ask when you're doing your due diligence on the businesses, do they have any exporting or foreign, receivables or any hint of international trade? And lastly, everyone knows the SBA limit's $5 million, but really it's $5 million per NACIS group, right? So for every three first number in your NAICS code, your industry group code number, if it's a different number in the first three, then you have $5 million of eligibility for that vertical. So that's always something that I always recommend for business owners, especially this group. I have a suspicion might be serial acquirers, right? And this would be a good way to vertically integrate businesses. So Andy, I know this is my update. This is my short and sweet. I think I got it done in 25 minutes. I'd like to open the floor for questions if there are any on any of the items or anything in SBA in particular.
Hi, yes. Can you tell me more about the MARC program for manufacturing?
So it's brand new. I haven't even met anyone who's done one yet, right? But we're taking applications. Frankly, it's the same structure as a 7A, except for the requirement that it's a manufacturer and that the loan can be a line or a term loan. But it's cool. From my colleagues' conversation, I don't know anyone's doing the line function yet. It's mainly the term component. So if you have, everything else has to match the business acquisition. I guess you could do up to 90% financing, $9 million with $1 million equity stroke, technically under that program. Did I answer your question, Kenneth?
Yeah, that was fantastic. Thank you so much.
Mm-hmm.
Well, I have a high-level overview question here. That if a buyer could change or maybe improve on something, or to improve on SBA odds or approval odds, what should it be?
So I think that the one question I always get repeated most of the time is the direct experience question, right? So it's a chicken or the egg. How do you get experience? You're not in it. How do you get in it? All that fun stuff. So things that I've always talked about from mitigation perspectives are, first and foremost would be to have a good education of like how much expertise is needed in that field. Bankers are going to be generalists, they're not going to be specialists, so we're always going to assume the worst, right? So licensing requirements for an HVAC are different than a plumber, different than a contractor. Understanding what those are and answering the question, what do you need to have in order to stay in business, right? So if you understand that, and let's say it does require a licensed professional that you are not, okay, let's assume that. So path A, can you get that license? Understand, if you can, what are the process, how long is it going to take? A plan, if you're going to go option A, what are you going to do in the meantime? Is the seller going to give you your license? Are you going to have someone on staff that's going to have it, right? Let's say you're never going to get the license, but you need a license. So what are you going to do? Okay, there's multiple options. Option number one, have a minority partner that has a license that you can then have vest over time and performance of the business. So that way you mitigate your financial risk, but you can then demonstrate that you can tell the bank, I can stay in business because this person is licensed and they're a minority owner. A long-term contract, right? That's how you don't want to give up equity, but you can give a contract for the term of the loan that can be conditional to performance, and then show that the license will be there at execution. Let's say there's none of those options. Then you can say, I'm going to hire someone, and you can say, this is what the going rate for a person with this license goes for in my market. I've had 3 conversations with people that are interested in joining my group, and then they're going to be a minority partner. They're going to be they're going to contract with me for the life of the loan, right? So if whatever your quote unquote gap is, if you really want to get in that industry, these are the mechanisms that I would recommend. And here's the key part, guys, for this transaction, right? Because here's the cool thing. If this is just the first one, doesn't mean you have to do the same structure for every other one that you do afterwards. So let's say you get in and then you have the license over time. Now you do the next one and we don't need to do this dance anymore. Or you repeat it, for each location that you do it. You get a special licensed person. I don't know. But my point being, if someone says you don't have direct experience, don't take that as I can never get that business. I think my challenge to you would be, how can you mitigate the concern of the institution, which is, will you be able to stay in business? That's it. Does that answer your question, Andy?
Yeah, it does. I think that will be really helpful for those who are still in their search phase at the moment. At least early on, they can mitigate that scenario.
Fantastic. Another little cool tip: you can buy real estate at the same time that you're buying your business. Normally, these business terms have a 10-year term, but there's this cool SBA trick where if more than 50% of the use of proceeds are real estate or long-term fixed assets, then the whole loan assumes the long-term of the loan, right? So technically, you can buy your business and a piece of real estate over a 25-year term period. So the cool thing is, if you're paying 3 to 4 times owner's benefit, but you're getting 25 years to pay it back, that's a pretty good positive cash flow differential. Good. Any other questions from the group or any other toss-ups, Andy?
Well, I'll give the floors to the group. I think Sean raised his hand. So go ahead, Sean.
Yeah, sure. So just a follow-up question on what you just said. Is it possible to, let's say you complete your first loan with your business, can you then go find a piece of real estate and roll that in with your current loan to get a 25-year loan on everything?
So I love where your head's going, but the answer is no, Sean. So unfortunately, that's like a one-time window. It's when in this particular scenario, if you're going to look for a piece of property, right? And at that moment, any new uses of proceeds, except debt refinance, cannot be rolled in. So any new uses of proceeds, working capital, equipment, any of the stuff that you want to do more to your business, roll it into the real estate, and that gets to 25 years. But you can't debt refinance into 25 years. I wish. That would have been amazing.
Yeah, very good. So in order to do that effectively, you kind of want to do it in one lump transaction.
Ideally, yeah. Oh, and then here's another thing. You don't have to buy the real estate that they're currently occupying, right? Let's say you could technically find a piece of property and a business at the same time and deal with two selling parties, which I do not recommend, and time it out perfectly so they both close in the same time. But it can be done, technically.
Okay, interesting thoughts. Thank you.
All right, no worries.
Well, for the others, if you have any question, this is your time. And if you don't have um, any yet, let me just also inform you that we have sent out some reminders about the upcoming workshop. And I believe Javier will be there to as well present. And you'll be able to meet him in person as well. So yeah, please check your inbox, or maybe if you have any questions, feel free to reach out to me or Nathan so we can provide you more details about the workshop.
Sounds like a plan.
Yep. Well, do we have any further question for Javier at the moment? Well, if we don't have any questions to Javier, we have his contact information. So don't hesitate to reach out or send him an email if you need some answers. Yep. And I'll be providing you his email address. All right. Well, I think we ended early today. I don't want to take so much of your time, guys. Thank you so much for joining. And if you do have any questions, again, feel free to let us know. Thanks, everyone. Have a great Monday.
Happy Monday. Bye-bye, guys.